Hello again, people. Right, I thought I'd just make a quick video about this particular trade here, this Euro-Yen short, because it sort of goes back to what I was talking about yesterday with the sort of uptrend pullback continuation situation, with staring at the candles and looking closely at what the RSI histo is doing as well. So. And the real reason for this video is that I know people use masses and masses of indicators. They've got the histo, and they've still got MACD, and they've still got RSIs and stochastics and all sorts going on, and then little arrows on the charts, fractal indicators and goodness knows what else. But in my opinion, and I think, oh, there's an alert going off. I think after a few years, maybe 5-10 years at this, other traders would agree with me that less is more. And just understanding the RSI, learning about the RSI, and watching it closely with price action is the point of this video, actually, because I've said this many times, and I still see people with tons of indicators, and that's fine. It's entirely up to you. We've all got to learn our own ways, but the 3 candle reversal I've studied for at least 12 years now, since I first sort of came across it with after studying 2B reversals and the 1, 2, 3 from Vic Sperandio, and seeing the precision of the candles. Well, once you've got that, and then you try and match up, which I've been doing all my trading life, really trying to find something that actually matches the 3 candle reversal, and that's what I found with the RSI histo, set to 8, oddly enough. But that's another story. But I spent years testing with the A's as well, and noticed that the 8 setting creates far more winning scalping trades when you use expert advisors than the 14. So why people will use the 14, I don't know. Maybe it is a scalping thing. So we've got the RSI set to 8, and we're learning about this thing all the time. I've had it on my charts just over a year now, well, nearly a year and a half, and it just keeps getting better and better. So looking at this trade, I can clearly see on the 30-minute chart. Well, start at the start. I've come back from doing my chores, having a break from the charts. First thing I want to look for is something that looks interesting on the line chart. In other words, it's broken some sort of support level. And with the line chart, looking on the 15-minute in particular, we can clearly see we have got a level here that's created this higher high. That's the high, low, new high. That is a valid support level. These aren't so exciting because they're quite small, as opposed to this jagged movement, big movement. Then we've got another level here, and I'd highlighted the let's thicken up the MA on there, and I've talked about this before. Look, this level here, this orange box, is lined up to an old resistance level, because when price comes down, it will often bounce on the resistance level, and that's also why this is an H4 high and low here. That's the sort of last H4 before the Frankfurt Open, and that was also going to be like a likely area that the price will have a problem at. That's why I only went for 8 pips. Because price can always bounce, always be prepared for that. It can always bounce off resistance that acts as support. It doesn't have to go down all this to the bottom of the orange bar, if you like, where that support level is, but it's highly likely it will. But being a scalper and having been caught out so many times before, I'd rather take 10 super sort of high probability tests of old resistance acting as support than 3 risky trades hoping that they will go to the bottom, because often, as price does, sorry about that, it reverses. So back to the RSI. Now this is the important bit also. At the close of an hour, so suppose I got home, I don't know what time, 3 o'clock this afternoon, an hour has just closed. So what then I do, I'm looking at the support area, I'm looking at my hourly close. Let's have a look what did happen on this one. The hourly closed red, brilliant, just before I was considering trading. Let's have a look. I might have got into this trade about 3:30. I'm not going to look at the details, but the hourly closed, that's just before my entry, it was red. Check the 30-minute, and we'll put the candles back on there now. The 30-minute was actually in a pullback phase just prior to my entry, and this is interesting, and this is another reason I made this video. Look what's happened. We've had red, pullback green, continuation down, a couple of reds, one pullback green, continuation down. Momentum is growing all the time. Again, this is the RSI, we're learning. And then we've had another pullback, and then we've had the big push down. So onto the 15 minutes. So you can see there's a pattern here. We're below the Dragon 2, we're below that buying area that's failed to hold, and we're heading towards the next clean green candles, the next area where it's a bit of a mess, congestion. So pop to the 15-minute, and you know, we can clearly see now we've got growing momentum. We've had a little pullback here, and then we've got another red, which is where I entered, and it's below the 20. That is strong momentum, and also, you know, glaringly obvious target here. And not only that, we've got the Asian session low that more often than not gets tested as well, and then we've got the round number, the 130 level there. So, you know, the point I'm trying to make is come back to your charts. If you've had a break, apply all the different stuff that we know works, strong buying areas that failed to find buyers again, add the RSI histo logic to it, add the candlestick logic to it. If you want to get rid of the candles, you can then have a look at your line chart, which you know I absolutely swear by, and you can even look at these areas here. There's a clear area here to here, and look what happened. We've broken it, closed through it. And this is important also, and it's something that I'm adding to my toolbox, as it were. That line is on that 15-minute level, but if you go to the 30-minute, sometimes that kink isn't even there. The kink is moved up, if you like. The area of interest, or the area of concern, is higher up. So if you've closed, then you flick back to your candles, and you've closed below that concern area on a higher time frame, you have an even better chance of the price continuing. So, you know, this is multi-time frame sort of common sense analysis, if you like. The close is, this is, and also my belief that the close of the price, which is what the line chart is telling us, which is why really the line charts are more powerful than single candles and wicks and things. The close is of the maximum importance. So if your candle closes below the line chart low, then it's a good chance that that level is broken. Buyers have been overwhelmed in a down move. Okay, so that's it. I hope that's helpful. Remember, all you have to do is draw your levels and just let price break it, and then look for the perfect entry using all the RSI, 3 candle reversals, line chart closes, candle closes between line levels, all those things, add them all together. Oh, and with clear targets, whether it's pivots, round numbers, Asian session low, you've got clear targets below you, you're good to go. But one last thing, don't chase the price down here to here. That's high risk. It could bounce all the way up here and pull down. Get in when the color changes, okay, as near as you can to the break of the supply and demand area. Okay, thanks for watching, have a good evening.